Hello, class, and welcome to our eighth lecture series on financial accounting or principles of accounting. And I'm your instructor, Jamal Hyder. Okay, regarding our midterm, as we decided, so I'm going to be just reminding you that our midterm is going to be on our next week lecture, which is on 10th of November. So we would be talking about the paper pattern in our last slide. So just wait for that. But before that, let's talk about some quick review what we discussed in our last lecture, and that is very important. So we talked about, our major goal was in our last lecture was to learn about bank reconciliation statement. We talked about fraud triangles, internal controls, how internal controls are set up, what are the different challenges with the new age when we have e-commerce, right? And then we talked about the bank reconciliation statement. So summary is that we have two balances. One is the bank balance, because nowadays it's very easy, very convenient not to stack a bundle of cash in your office. Rather, you open a bank account. It's easy to manage. They have online services and all the stuff. So your core business operation is to manage the business, to operate the business. So your energies will be focused on business operations, selling, minimizing the cost, and others. So, but when the bank statement comes, so we see that our cash book balance is not equal to bank balance. So red alarm starts. Is that a fraud? Somebody took money from us, and because our books and bank balance are not tally, not equal. So now we want to know that what may be the possible legitimate causes of these differences. And then we talk about there is a cash in transit or deposit in transit. What does it mean? It means you receive cash from customer, bank, the customer gave you a check. A check is a form of cash because it has a highest liquidity as well. So we consider it as a cash and cash equivalents, right? So we put that check into our account, but bank needs at least 3 days or maybe more time to clear that check. If the amount is big, $1 billion or $100 million, it takes time and approval as well. So in our books, we receive cash, we make the entry, we increase our cash balance. But in the bank side, they didn't increase that one. Why? Because there is something that transaction is to be going on. So we call this deposit in transit. And then there was outstanding check. It means we wrote it down checks to our suppliers or to our workers for their salaries, or to landlord for rent payments. But as soon as we write the check, we decrease our cash balance. But the other party who received our check, he didn't deposit that in the bank account. So bank balance will not be decreased, right? It may be the difference. And then we talk about, okay, there is human error as well, right? So we would be very realistic here. Then we talked about, okay, so that is missing on the bank side. But what is missing on our side? What we, have not recorded in our cash book. Number one is we authorize the banks to collect on our behalf. Rather, customer is calling us, paying us. We just, outsource this task to bank. So bank is responsible for collection. We just notify that, okay, through program or something, okay, this customer has to pay us, remind that customer and receive the money from him. We don't know. No, this is the age of e-commerce. We have Alipay, different tools, Visa card, MasterCard, online services. It's just on a one click, everything is going to be transferred and you receive. But you will be notified when you receive the bank statement, right? And nowadays, due to this, e-commerce and development of IT technologies, now this is also going on live basis, because we can also see the bank statement online. Just log on to our app. We have app, we have mobile app as well, so we can just see that. So in like 10 years ago or 15 years ago, every 15 days or every at the end of the month, bank will send you the statement in a printed form, and then you are making the bank reconciliation statement. But now it is just a matter of seconds. You can also request the bank statement anytime, even at the middle of the night. You can just download that, right? But the mechanism is like that. So what we have not recorded, all those things that we authorize our banks to receive. So it means electronically receipts, revenue collection, either it's our business owned apartment and we rented out that apartment, means that is a revenue we are receiving. So we directly involve the bank. Okay, bank, you are responsible to receive. So we will be notified by the bank. So we didn't record that. So it means we have to record that. So any kind of bank collection, either dividend received, dividend revenue, interest received, interest revenue, or either any kind of payment received. And then the charges. So bank, of course, services of the banks are not free. Printing costs, check printing costs, collection costs, service charges, plus the non-sufficient fund checks. Because when we receive from customer, we deposit to our bank, and when bank investigates and bank found out that it was a bounce check, in our account, in our cash book, when we receive that check, we increase the cash. But bank said that the cash is bounced, so we should decrease the balance. So entry would be reverse, right? Similarly, all those payments that we allow banks to make on our behalf, rent payments, interest payments, dividend payments, right? So remember, we need to add back receipts and subtract the payments. And of course, on the other side of the bank, there are humans and they can make errors, right? So there is a very subjective element here between error and fraud. Then we have to see that whether it is intentional, then it is in the category of fraud, and it is not intentional, then we call it an error. An error can be from bank side and can be from customer side as well, right? So that was our previous lecture. So as we promised that we would be doing more example, so I want you to please take this picture, take a picture, and I would be setting up the breakout room activity, and you would be making bank reconciliation statement, right? So you need to tally or balance book balance and bank balance, right? So remember all those hints or revision that we just talked about in our previous slide. So meanwhile, let me set up the breakout room activity. So I would be making 3 groups. Please accept. Meanwhile, please take a picture. And remember that one. You need to turn on your microphone and your camera, because this is a group activity. You must collaborate, talk about, and respect the group coherence as well. Okay, so I'm setting up. Please accept. So those who are watching the video, so I'm going to pause the video here to save the space and the size of the video file. So please don't mind. I'm going to pause the recording until we come back to compare our answers from the breakout room activity. Okay, see you after breakout room activity. Okay, class, welcome back after a long breakout room activity. So let's compare our answer, but first I need to read that illustration so that those who are watching online, so they know what was the question. So Logan Harmon operates an ice skating rink. He has just received the monthly bank statement at July 31st from Valley National Bank, and the statement shows ending balance of 1,500. So that is the bank balance, right? Listed on the statement are the bank collection of account receivable, right? So bank collected account receivable, right? A service charges of 14, non-sufficient check to $40, and 20 as charges for printing the checks. So in reviewing his cash records, Logan identifies outstanding check totaling 1,220. So that is the book side, cash book, activities. So outstanding checks, right? Yeah. So what is outstanding check? So he write it down, but those who hold our checks, they didn't present it to the banks, right? Deposit in transit 3530. It means this amount is yet to come to our bank account, right? So during July, he recorded $540 check. It means check was written $540, but he recorded as 54. He forgot to write down the zero, right? But on check, he recorded 540. So the salary that part-time employee received was 540, but he recorded 54. So how much he didn't record? 540 minus 54. What is the answer? 486, right? Or not? 540 minus 54, yeah, 486. So it means this much amount we still need to decrease from our cash book because we only decreased 54, not 540. That is human error. So the cash account shows the cash balance. So that is the book balance, right? So let's make that. So there are two ways to make the bank reconciliation. One is account format, one is the report format. So this is account format. So on the left hand side, we have a bank. On the right hand side, we have books. So let's write it down there, balances. So here I have highlighted here the important transaction here. So the monthly bank statement at July 31st from Valley National Bank shows an ending balance of 1,500. So that is the bank balance. So you just write it down here, bank balance 1,500. Next thing, you write it down the book balance, cash book balance, which is 3,752. And now, in order to reconcile the books, see the bank statement. What is missing in our cash book that is in bank statement?